Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover the weakening U.S. labor market, Nvidia's changes in China operations, real estate investment strategies, global news, Nvidia's development of new chips for China, regulatory updates for institutional investors and cryptocurrencies, and Seth Klarman's insight on stigma and revulsion in deals.
U.S. job openings have taken a plunge, reaching the lowest level they've been at since March 2021. The latest numbers are showing a decline in available jobs, with approximately 3 jobs available for every unemployed person. In October, there were an estimated 7 million job openings, but this is below what economists had predicted, as they expected the postings to reach 3 million. Various industries have experienced setbacks, with the financial activities and retail sectors taking the biggest hits. The number of new hires also saw a slight drop, going from 9 million to 89 million, while quits and layoffs showed minimal changes. This decrease in job openings suggests that the labor market is cooling down, which might be something the Federal Reserve views positively. It could assist in achieving their goal of bringing inflation down to 2%. However, it's important to note that a decline in individuals willingly leaving their jobs could indicate a lack of economic security and potentially foreshadow a slowdown in wage growth. In other news, recent reports reveal that renting a 2-bedroom dwelling has become more affordable than buying a comparable property for 89% of Americans. This marks a significant increase from just 3 years ago when the figure stood at 16%. It's quite evident that housing prices have risen substantially, particularly in relation to people's incomes. On a global scale, a Chinese shadow bank, Wanxiang Trust, is grappling with significant financial troubles, adding to the ongoing challenges faced by such institutions. Additionally, hackers have gained access to profiles belonging to nearly 7 million customers of genetic testing company 23andMe. Lastly, a clash between Tesla and Swedish workers may escalate into a larger regional conflict. So let's talk stocks. Nvidia, the big player in the tech world, has its sights set on the lucrative Chinese market. Why? Well, they're developing new chips specifically to comply with the new restrictions imposed by the U.S. government. You see, Nvidia already has a major presence in China, accounting for a whopping 20% of its total revenue. But these new restrictions could pose a threat to its stronghold. China brings in billions for the company, with Nvidia controlling around 90% of the $7 billion AI chip market there. Impressive, right? However, due to these restrictions, Nvidia had to delay the launch of its new AI chip targeted specifically at the Chinese market. During their recent earnings call, they also warned about an anticipated drop in fourth-quarter sales in China due to the changing situation. But here's where it gets interesting. Nvidia is not staying down. They're working hard to develop new chips that will hopefully get the approval they need to continue ruling the Chinese market. And they're not stopping there. Nvidia is also looking to expand its reach in Southeast Asia. They're in talks with Singapore for potential significant investments and collaborating with the city-state to develop their own large language model, Xiaolian. So while there may be some challenges ahead, Nvidia is not backing down. They're adapting, innovating, and aiming to maintain their dominance in China while exploring new opportunities in neighboring countries. In the world of crypto, there's always something happening. Let's take a look at the latest news. First up, there's a bill in New Jersey that aims to classify crypto sold to institutional investors as a security. This could have implications for how these transactions are regulated and could potentially impact the industry as a whole. In other news, Dogecoin, the meme-inspired cryptocurrency, is making some noise. It has seen a gain of over 10% in the past day as it celebrates its 10th anniversary. It's always interesting to see how these quirky coins can have such an impact in the market. Another major development is the ongoing saga between the crypto community and the Securities and Exchange Commission. The community is expecting the SEC to challenge the recent court ruling on the programmatic sales of XRP. This will definitely be a story to watch, as it could have far-reaching consequences for the industry. Meanwhile, the SEC has decided to postpone its decision on Grayscale's application for a spot Ethereum ETF. This decision could potentially open up new investment opportunities for traditional finance players and sophisticated traders. Lastly, there are some interesting market trends to note. Metrics from the futures and options market indicate that there might be a shift in money flowing from Bitcoin to Ether. This could signify a changing tide in investor sentiment and preferences. Real estate can be a profitable way to make money, and we're here to help you understand your options. One way to invest in real estate is by purchasing a property, like a house or office. However, this may not be feasible for everyone due to high interest rates and increasing property prices. The average house in the U.S. costs over $495,000, making it difficult for most people to afford. But if you can, buying a property can provide multiple ways to make money, such as through rental income and capital appreciation. Keep in mind that there may be discounts available for first-time buyers or specific earning groups, so check out federal and local grants to make the process easier. If buying a property isn't an option, you might want to consider investing in a real estate investment trust, or REIT. REITs are companies that own, operate, or finance income-generating real estate. They can be a great alternative for those who don't have the funds for a complete purchase. While REITs don't offer the same capital appreciation as owning real estate, they do provide a steady income stream and higher liquidity. You can even buy shares of a REIT in a taxable brokerage account or a tax-advantaged retirement account. Another option is investing in real estate through specialized investing apps. These apps allow you to enjoy rental income and profit from capital appreciation. However, they are generally less liquid than REITs, meaning you might not have the option to sell when desired. To minimize risk, we recommend only investing in registered apps. Some top options include GetStake, which operates in the UAE market, and Realty Mogul. Finally, you could consider investing in construction stocks. It can be a clever way to benefit from rising real estate prices. Keep in mind that these stocks are usually classified as slow and steady income stocks, more likely to return money to shareholders than to double in value overnight. Some top names in the construction industry include Caterpillar, United Rentals, Vulcan Materials, and Fluor. Interestingly, some companies like McDonald's are even considered real estate firms by many. Do you like a good deal? Well, here's a personal finance quote that might catch your attention. Generally, the greater the stigma or revulsion, the better the bargain. Seth Klarman. Now, what does this mean exactly? Basically, it's saying that the more something is stigmatized or considered repulsive, the greater the potential for it to be a great deal. It's kind of like finding a hidden gem among the unpopular options. Think about it in terms of investing. When a certain stock or investment is considered risky or unpopular, it tends to have a lower price. However, if it's actually a solid investment opportunity, the potential for higher returns is there. So, by overcoming the stigma or revulsion surrounding it, you might just be able to snag a rare bargain. This concept can also apply to other areas of personal finance. For example, buying a house in a neighborhood that's seen as undesirable might mean a lower price, but if the area is up and coming, the value could increase over time. So, the next time you come across something that seems stigmatized or revulsive, don't dismiss it right away. Take a closer look, do your research, and you might just find yourself a great deal.
In today's episode, we covered the weakening U.S. labor market, Nvidia's China operations, real estate investment, global news highlights, new developments in Nvidia's chips for China, regulatory updates in the financial world, and Seth Klarman's insights on finding better deals. Thanks for tuning in to The Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.